there are three branches of accounting: the financial accounting, cost accounting, and management accounting. If we talk about the financial accounting, that we calculate what is the financial statement of the business, and we know the profitability of the business in the form of a profit and loss account. In this financial accounting, and it is very useful for the outsider peoples, maybe for the investors, bankers. So why the investors and the bankers, they are interested in knowing the financial positions of the company? Because the investor, they want to know about the company financial position, so that they can invest some money and earn profit. So this is a financial accounting. On the other side, that we have a cost accounting and management accounting. So cost accounting is also a branch of accounting, but this is related to the cost. For example, that if a manufacturer is thinking about, like, if I manufacture the mouse or keyboard, for example, in my company, and how much will be the cost after the production, cost per unit. Or on the other hand, if already that this same quality product, mouse or keyboard kit, is available in the market, at what price. So they will just calculate the difference between these two, and will check whether there will be viability to manufacture or to buy the ready product from the market. So that is the cost accounting. Management accounting is related to the managerial affairs of the company, maybe internal management. For example, that they want to know that if we want to open a branch somewhere, maybe in the local area, maybe abroad, so whether that our company is having enough money so that they can open the branch in other part of the world, or maybe in the same province or state or city or area. So second, maybe in the management accounting comes like whether we want to hire some of the employees for our organization. Is there any need for that? Third, maybe related to that, we want to raise the salary of our employees if required. So all these kind of decisions are the management decision. So that is known as the management accounting, that is for the internal purposes. So these are the branches of accounting that we have. Next question we have here, what are the creditors? We talk about what are the creditors. So creditors and creditors are those people to whom that we pay money. So creditors are when the goods are bought on credit, when goods are purchased on credit. On credit means that we are not paying anything. For example, our company purchased some goods, and we have not paid any amount to the supplier. So it means we have bought goods on credit, and definitely we will pay some money in future. So we will make a list of those people or those suppliers, so that we should know how much is the amount that we have for our creditors to pay. So if we talk about goods, so what are goods? Goods are all the commodities and items which are bought for selling purposes are known as goods. For example, I am running electronic business, and I have a number of laptops, keyboard, mouse, pen drive, and maybe some mobile phones, some lights, some speakers. So all these are the electronic items, and maybe more than that. So whenever that I'm going to buy goods for selling purposes, so that is known as goods. Any items that we are buying, and the purpose behind buying is that we want to sell it in future to our customers or maybe to suppliers. So those items or commodities are known as goods. But on the other side, if I'm going to buy some product for office use, that is not goods. That will be our investment. This is the difference between these two. Article may be same. I bought 10 laptop for my office, for selling purpose, not for office use, but for selling purpose, right? And 11 out of these 10 laptop, if I'm going to use the one laptop for my reception area, I keep that laptop on the reception and using for the billing purposes, maybe for accounting purposes, maybe for any other purposes, and for sending emails and keeping record of customer and goods. So that is considered as assets of the company. That will consider as the fixed assets, because that laptop we are not going to sell it. The rest of the 9 laptop that we have here, the purpose of those 9 laptop is for selling to the consumer and earning the revenue, right? So this is known the definition of goods. So now we're talking about the creditors. When goods are purchased on credit, and then definitely we will pay this money in future, and list of those people that will be known as creditor. On the other side, if we talk about the debtors, what are the debtors? So debtors are when goods are sold on credit. We have some laptop, we bought it, and just now we are going to sell it. When we are going to sell it not on cash but on credit, and we will have a list of our customers with us, and when we total the list of customers, we will recognize that in coming days or coming months that we will be receiving some of the cash from those people. Those peoples are known as debtors of the company. So this is our assets, right? So this will be considered as our current assets. Next point we have, what are the rules of debit and credit, and which statement is, if we talk about like what are the rules of debit and credit and which statement is true. For example, this is the statement. The statement is for the personal account, debit the receiver and credit the giver. Yeah. So what do you think? This is true or false? So according to me, this is true, because this is the rule of a personal account.
Yeah,
Next,
that's true.
yeah, this is true. So what is drawing? If you talk about the drawings, so the drawings means the withdraw goods or cash for personal use by the owner. For example, that I'm owner of the business and I'm running my RJ Electronics company, and I want to withdraw money from the business for my personal use. Let's say I want to use that money for paying my daughter's tuition fees in the college, right? So the money that I withdraw, that is considered as a drawing, and this money will be subtracted from my investment. I made investment at the beginning of the company, like $10,000. Now, if I am going to get this money back, like $2,000, I am withdrawing, and $8,000 that will be the remaining amount invested by me, right? So it means whenever I feel to invest more money in the business will be added. If I'm going to withdraw some of the money for the personal use, will be subtracted. So this is known as drawings. Next, we have here, what are the branches of accounting? I think that we have already discussed this question before. So financial accounting, cost accounting, and the management accounting. There are 3 kind of branches. So what is the trial balance? So next question we have, what is trial balance? If we talk about the trial balance, it shows the balances of all the ledger account. So we know that what is the ledger account. In the ledger account, we have a debit and credit side. And in ledger account, we always the conclusion and the purpose of the ledger account is to know the balance. For example, that we have a cash account, cash ledger account, rent of the building ledger account, then owner's capital account, sales revenue account. Then we, for example, we have a bank account, right? And all these are the ledger account. And when there will be a balance from all these ledger account, and those balance, if we put in one list, right? So that list is known as a trial balance. So the trial balance will be, it shows the balance of all the ledger account. This is known as trial balance. Next, I have just explained about the goods. So what are the goods? So goods are the commodities and the items which are purchased for the selling purposes is known as goods. Okay, for example, if anyone want to know about the financial position of the business, how the financial position of the business can be known, that can be known with the help of a balance sheet. Balance sheet shows the health of the organization, because on the balance sheet we know there are two sides. So one is the asset and another is the liability side. On the asset side, we know what are the current assets and the fixed assets we know. And on the liability side, we have owner's equity as well as outsider liabilities. Right. So whenever any person, outsider or investors, maybe insider, they look at the financial position of the business, they want to see the financial position of the organization, and definitely the first and the most important part of the financial statement is the balance sheet. Right. Okay, so next we have a shareholder. If we talk about the shareholder, so these are the person who are the owner of the corporation. A person or a company who owns one or more shares of stock in a corporation is known as a shareholder. If we talk about the stock, it means shares. We are talking about the shares. So even I have one share of, let's say, Tesla company. I'm a owner of that, or I can say I'm owner of the corporation, just related to the one share only specifically. If anything happens wrong with the company, that I will be liable only for one share. So this is known as the limited liability as well. So the shareholders are the owners of the corporation. Now, if we talk about what is the note payable. So note payable is that a liability which is evidenced by written promise to make a future payment. So this happens in case of when, for example, I go to bank and I ask that I want a $15,000. So they say, okay, so you want $15,000 just for 6 months or 3 months, and there are some documents that you need to bring, like your ID proof and what are your financial statements of your company if you are running your business, how much that income you have, and for how long that you have been running your organization. After providing all this financial and personal identification, then banks say, okay, so we are ready to give you $15,000 money for your business purposes, and that this is the document that you have to put your signature here. So this is just like a promise to pay in future. It's a written. So this is a written promise. So that is known as note payable. Right. So this will become the liability of the organization. Now, note receivable. Sometimes, like we are a lender, and in these days that you are hearing that the market is very strong. I talk about the real estate market, and like people that want to buy some loan from the lenders, and there are many private lenders. Okay, so this is the kind of an asset which is evidenced by the other parties' written promises that entitle you to receive cash in future. Right. So, for example, that for example, I am a lender in this area, and I give money to the people, whatever their purpose behind their withdrawing, they're getting money from me. And definitely I will get some amount, like maybe 2 to 3%, maybe 2 to 5%, maybe more than that, and interest on that amount that I will give. So whenever I will be going to give some money to them, and definitely I will ask some of the proof proofs of their income, proof of their status in the Canada, for example. If we talk about like what is the status in Canada, if they are a PR, a citizen, or maybe on work permit or visitor. So accordingly, that lender will decide whether to pay money or not. So lender always want to be secure. If like they always prefer to give loan to the PR people rather than to the visitor. So whenever the lender give money to them, and there will be some written promise and agreement between these two parties. So when the receiver is going to sign on the paper and in front of the lender, and then that is considered as a note receivable for the company, for the lender. So in future, maybe after 2 months, maybe 3 months, or maybe 6 months, our company as a lending company that will receive money later on, and the promise, which was a written promise, that is entitles me to receive money from that client in the future. So that is known as not receivable. Now, so these were not receivable and not payable. Now the next one is account payable. If we talk about account payable, then what is this? The account payable, it is clear from the name, something payable that we will pay in coming days, week, or a month, or maybe 3 months or 6 months. So account payable, this is the oral or implied promise. Oral or implied promise to pay off debts arising from the credit purchase. So that we bought goods. We are a company. We bought goods or something we purchase on credit, and definitely that we want to pay money in future. So that is known as account payable, which is considered as a liability of the organization. Now, if we talk about account receivable, so what are account receivable? So account receivables are an asset or a promise to receive cash in the future from customer to whom the business has sold goods or services and money is not yet received. Exactly just opposite to the account payable, right? So this is the money that we will receive from our customer due to that we have sold goods not on cash but on credit, and we have not received money yet, but in future definitely we will receive money later on. So that is not as account receivable in this case. If we talk about the owner's equity, so owner's equity is also known as a capital, and the equity, we know that a capital plus profit minus drawings, because the capital is the money which is invested by the business, and the owner, why owner invest money in the business? The reason behind investing money is to get profit. So for example, $5,000 that was invested by the owner in the business, and after then there is a profit of $2,000, definitely that will be added. 5 plus 2 will be 7, and $500 if it is drawing will be subtracted. So 5 plus 2 7, 7,000 minus 500, 6,500 will be the owner's equity. So owner's equity is means assets minus the liabilities. This is also known as accounting equation, right? So all the assets minus liability is equal to owner's equity. If in case of this is owner's equity in case of a sole proprietorship. If for example this is in case of partnership, then we will say the partner's equity. And if it is in case of a corporation, it will be known as shareholders equity, right? So this is all about the owner's equity. And next point is the financial accounting. If we talk about the financial accounting, what the financial accounting is. So the financial accounting is related to the branch of accounting that provide information to the people outside the business. So there are many peoples and organizations, they are mostly interested to know the financial position of any organizations. as an investor, as a taxation authority. We talk about the CRA, Canada Revenue Agency, in Canada, that Canada Revenue Agency as a taxation authority just want to know about how much profit of each and every organization in Canada is earning. Because why they are interested? They are interested because they will definitely get the revenue out of their profits earning. More and more profits earned by each and every organization, maybe private or public, maybe sole proprietor, maybe partnership, or maybe corporation. And the more the profit they are earning, more there will be revenue for the taxation authority, because there will be more profit, more tax, because this is the progressive taxation system. More you earn, more you pay tax to the government. And whatever the taxes that we are paying to the government will be the liability, right? So will be the responsibility of the owners. And this amount in turns that is used for a number of purposes. If we talk about the some of the purposes, some of the streams that are like for the environment, for the road constructions, for the medical facilities, for all the people living in the province or maybe in the whole country, and also for the education system and the promotions. Like the free education system is also there, that you can see for like for the secondary level, there is a free education to all the Canadian here. And this is also very good facility which is given by the government. So the government, the revenue for the government is the taxation. This is the most important and the main source of revenue for the government. There may be another resources as well, but for the accounting purposes, that the tax is the main source for them. Okay. So that's why we say that this is the branch of accounting that provides information to the people outside the organization. Okay, so now if we talk about the drawings, right? So what is the drawing? So drawing is a money which is money which has been withdrawn by business owners for personal use, right? So there will be some journal entry for this month. So drawing account debit to cash, because from the business the cash is going, so that's why the cash will be credit and the drawings account will be debit. The reason being that if you are going to debit the capital account or debit the drawings account, it means the liability that will go down. On the other side, the cash is withdrawn. Cash has gone from the business, so it will be credited. So in accounting, we deduct drawings from the capital account, that we know, right? So this is known as drawings in the accounting system. So now if we talk about what is the service revenue, if we talk about the service revenue, and this is what like the amount that a merchandiser earns from selling its inventory before subtracting expenditure, and this is also known as sales. So this is the sales revenue. For example, that I bought 10 laptop, one I'm using for my office purpose, and 9 laptop that I have, and I want to sell it. Whenever that, for example, I sold some of the laptop, let's say 5 laptop at the rate of 500, so 2500 that will be revenue for this time. So that is known as sales revenue. Okay, so so if we talk about what are the private accountant, sorry, the private accountant, if we talk about that is accountant that only works for one employer. So that is known as a private accountant. So the general accountant and the public accountant are CPA, certified professional accountant, right? So the private accountant is that dedicated to only for the one employer. We can take one example of let's say the Walmart. Walmart is a company, and Walmart hire one accountant for maintaining all the accounting working. So that is known as the private accountant. On the other hand, if there is a general accountant or maybe called a public accountant, so that person that he does practice their own. right? So anyone or any organization can visit their office, visit his office, and can have services related to the accounting and taxation purposes. If we talk about the T accounting, right? So what is this one? So this is the T account has two sides, which are called debit and credit side. On the left side is known as the debit, and on the right side is known as the credit side. So this is known as T account. So next, if we talk about the increase in the liabilities. So if the liabilities are increased or recorded by the credit, it means like if the liability, let's say the liability is increasing, it means that should be credited. By crediting, that liability will increase. But on the other side, if for example the cash is assets of the business. If cash increases, we debit. If cash decreases, we credit, right? So now in case of a liability, this is opposite of that. Increase in the liability are recorded by crediting that one, right? And decrease in the liability are recorded by debit. So this is the debit and credit. Whenever that we do some journal entries, so these rules are also applicable. And also we know that what are the debit and credit rules. Means I'm talking about the golden rules of accounting: personal, real, and nominal. So accordingly, that this increase or decrease in the liabilities, so that also can be interpreted with the help of those rules of accounting, golden rules of accounting. So if we talk about here, the posting is the process of transferring information from the journal to ledgers. So this is known as the posting from the journal to ledger. So journal is the first step after recognition of the transaction, right? So once we recognize the what kind of a transaction it is and what are the two elements involved in that transaction, and then we prepare a journal entry. After journal entry, we prepare a ledger. So this is the posting, and no doubt that after ledger, and we will create a trial balance and then balance sheet, a profit and loss account and balance sheet, which is also known as financial statement. If we talk about what is the purpose of trial balance, right? So we know the trial balance is to look at the balances. So what is the purpose of that? So list of all the accounts with their balances is known as trial balance, and this is the main purpose of that. Now, if we talk about what is accounting cycle, so accounting cycle is the first is the identification of the transaction. Once we identify the transaction and we record in the journal, right? And after then posting from the journal to ledger, from journal to ledger, then prepare a trial balance. And after preparing the trial balance, we prepare a financial statement, means profit and loss account and balance sheet. Now, one term that we use in accounting is known as the depreciation, right? So what is the depreciation? If we talk about the depreciation, this is a reduction in the value of assets with the passage of time due in a particular wear and tear. So what exactly the meaning of this depreciation is, I just would like to explain with one example. Today I bought one laptop in 2021, and after 5 years, maybe on 2026 or 2025, what if we see that the value of the laptop has gone down due to the wear and tear, or maybe due to the obsolete of technology, right? Today I just bought this laptop and spent $500. After 5 years, there may be just you will receive nothing, or maybe just only $50 if you would like to sell it in the market, right? So whatever the amount that we will be having, the reduction value, that is known as the depreciation. One more example that I want to just give you. In big organizations, the big machineries are purchased. Let's say one big photostat machinery is bought. That photocopier, maybe colored or a black and white black photocopier, that costing around $7,000. So that $7,000 they have spent for that one, and after the usage, maybe after 1 year, 2 years, 3 years, or maybe 4 years, that the efficiency of that machineries definitely will go down, right? And one day will come when there will be like that machinery will not be able to produce some photocopies and anything, and that on that day that we'll consider this is the scrap and we will just throw it out. But we consider that some percentage or something on every year we calculate depreciation on the assets. And I can just make you understand this thing with one example. For example, I bought one machinery. And just I have spent $10,000. And we know that the life of this machinery is around 10 years. If the life of machinery is around 10 years, and what I say, like for every year we will charge depreciation. So the simple thing is, what is the amount, total amount that we bought today, divide by 10. Divide by 10 is equal to $1,000. So $1,000 will be depreciation per year. And so every year we will charge depreciation, and this depreciation will be considered as an expenditure of the company, and we will put this expenditure on the expenditure side of profit and loss count. Right. So this is the one example of depreciation. Okay. And also, if we talk about the depreciation, in this case, like we bought this one, and this is the expenditure. Normally, we know that rent of the building is expenditure, interest on loan is expenditure, whitewash that is expenditure, and salary to the employees is expenditure. Salary to the employees that we give by cash or by check. Rent of the building that we also give to the landlord by cash or bank. But in case of depreciation, that we are not going to give anything to anyone, because we know that the value of this machinery is going down by $1,000 every year. So it means neither cash nor bank we are going to give to anyone, right? But if it is going down, this will be considered as expenditure. So this is also known as a non-cash expenditure, and which comes in the debit side of the profit and loss count as expenditure. So when we talk about it, it reduces the value of assets. This is also true. It reduces the value of assets. For example, the depreciation, what will be the journal entry for this? The depreciation account debit to machinery, right? So this will be the journal entry for this one. Okay. Next term that we use in accounting is we talk about the direct expenses. So the direct expenses, there may be direct expenses or there may be indirect expenses. There are two kinds of expenses. So first I'm going to talk about the direct expenses. So direct expenses are those expenses that are levied during the production of the goods. So production of the goods, it means that is directly related to the manufacturing units. If I would like to manufacture some of the keyboards and mouse, right? So I just I set up my factory in somewhere in British Columbia, and that's I have some raw material and products. So the end of all this process should be the finished goods. But before the finished goods, that I have a raw material, I just use the labor, like the wages. So all these expenses that I use for the production of goods from the beginning to the finished goods are known as the direct expenses. So direct expenses are those expenses which can be assigned directly to the cost unit, right? So also we can say like direct expenses is an expenditure which is incurred with the manufacturing of the product. For example, we're going to purchase some raw materials, and just there is a factory labor, maybe factory electricity, factory wages, and expenses that are incurred in the factory. Means we can say that that is for running the machineries and water or something. So all these are known as direct expenses. So it means which are directly related to the manufacturing of the product. On the other side, I'm going to talk about the indirect expenses. This is the second kind of expenditures, right? So what are the indirect expenses? Which is clear from the name itself. Indirect means which is not directly related to the manufacturing of the product, right? Indirect expenses are those expenditures that are levied after the production of goods and services. Direct is before the production, during the production, and this is after the production of goods and services. For example, that the production units are produced, right? So we have number of units. Now we want to sell all the units. For selling all the units, that we need some advertisement, we need office, we need to do some expenditure, we hire some employees in the office for marketing manager, sales managing team, we need some vehicles like so that they can go, we can transfer these products from one place to the another place to the retailers or to the wholesaler as well, right? Number of expenditures, right? So all those expenditures like advertisement and the salary and office expenses are known as indirect expenses. So indirect expenses are also known as overheads. So overheads are the additional expenditure which are incurred on bringing a product into the final consumer, right? It means that the final consumer is like have bought some of the goods and just our company want to sell this one, and when that we all the expenditure which we do in the company for selling of the product so that the consumer can use this one, all those expenditure are known as indirect expenditure. So the example of indirect expenditure are, you can see here, sales and distribution expenditures, office salary and expenses on sport services, office electricity, office water, printing and stationery, outsourcing expenditure, advertising expenditure, and many more. So these are known as indirect expenses. Now, if we talk about the discount. So what is the discount? Everybody knows that this is the discount. Whenever you go to buy something, you need, oh, is there any discount? You say, okay, yeah, we have 10% discount on this product, and additional 5% if you buy some extra product. So that is also known as a cash discount. Cash discount is also known as the purchase discount, and definitely if this is discount for the company, if we talk about the company, I'm running my RJ Electronics company, for example. If I'm running this company, and definitely I will receive some of the discount from other company if I buy goods in bulk. So that will be known as a purchase discount. So for the purchase discount, we know that there will be journal entry for this one, right? So purchase account debit 1000, and we know that 980 that we are paying cash, and $20 is the discount. So discount, we know discount is the income, and according to the rules, we know that if discount is income, just like a revenue is also income, discount is also income. And this is income and expenditure that comes under the nominal account. And we know the rules for the nominal account is debit all expenses and losses, credit all income and gain. So this is income. So that's why this is credit. Two means credit here. Two discount received. And the cash is going from the business. So to cash 980, right? And purchase account debit. This is the goods that we are receiving, right? So goods are real. So debit what comes in. So purchase account debit to cash to discount $20 in this case. So this is just I have taken this general entry to make you understand about the cash discount, right? So cash discount is an income in this case. Now, if we talk about the assets, so assets are divided into current assets and a fixed asset, but I'm talking about the current assets here. So current assets that are expected to be converted to cash, sold or consumed during the next 12 months is known as current assets. Fixed assets are those assets that we use for the long term of the business, for the operation of the business. Now, if we talk about the current liabilities, so this is all these are a debt due to be paid within 1 year. So that is known as current liabilities of the business. Now, if we talk about the retained earning, so retained earning is what? So retained earning is related to whatever the accumulated profit of the corporation, right? After distributing dividend since incorporation is known as accumulated profit. I just would like to give you one example related to the retained earning. So if sometimes you may confuse like what is the retained earning and what is the net profit, right? So net profit is different. First of all, expenditure are less, income is more, then there will be a net profit. Okay, so net profit for first year minus dividend. So dividend is the amount which is distributed amongst the shareholders. Mostly the corporations, they declare dividend every quarter. For example, if there is a profit for a Toyota company, $10,000, right? Okay, so Toyota company is having a profit. Okay, so profit for the year 2020. Profit for 2020 year is, let's say, $3,000. And if they are going to declare 10% dividend, for example, 300 is a dividend. So the rest of the amount that will be the retained earning. 2,700 retained earning. Okay, so this will be for the 2020, right? So if we talk about the profit minus dividend is equal to 2,700. If we talk about in general term, this will be the net profit. Okay, so what is the retained earning now? Retained earning will be, for example, this company starts in 2020, right? 2020, and in 2022, let's say the same thing. I'm just going to copy and paste it here again one time. For example, the 2021 is going on, and in this case there is the profit of $4,000 and 400 is a dividend, and the rest of the amount will be 3,600. So 3,600 profit for 2021 and 2,700 profit for 2020. So total of these two will be known as retained earning, right? So total of these two will be known as retained earning. So what will be the total of this? This will be 63 If we talk about the 6300, 2700 plus the 3600 is 6300 is known as retained earning of the business. So now again we would look at this retained earning, accumulated profit. Accumulated mean this profit of this year, profit of this year. For example, the Toyota company that established their organization in 2021. This is the starting year of the company. For example, it has started a long time before, but just we are talking about, for example, that this Toyota company started their business in 2020. So that's why this is the first year profit and this is the second year profit, and the total is the retained earning. And this earning is kept by the business for the investment purposes. Right. So accumulated profit of the corporation after distributing dividend. This is the profit after distribution of the dividend since incorporation. Since incorporation mean since starting of the company. So accumulated mean the addition of profit 2020 and addition of the profit in 2021, right? So this is the total. So this is known as retained earning. Okay. So these are the important terms that are used in accounting and that I have explained this one in detail.